moving average has a major problem. The big challenge is setting look-back period or length for your moving average. If you decrease the length, the moving average line gets closer to the price action, and if you increase the length, it goes farther away from the price action. So what length is optimal for your moving average? To answer this question, you need to backtest hundreds of values for the length of moving average to see which length provides the best balance between profitability, consistency, and trade frequency. You know that it is not easy and it takes lots of time and energy. But the good news is that recently a new moving average indicator is published on TradingView that automatically does the backtesting for you and shows the best moving average line on the chart. To add this amazing indicator to our chart, here we click on indicators and we search best SMA finder, this one, which is now editor specs indicator and written by Julian H.A. Alright, as you can see, a moving average line is added to the chart. At the moment, the moving average length is at 20, and this is the optimal length that the indicator has found. The indicator has evaluated hundreds of lengths from 10 to 1000 to select the one that provides the best balance between profitability, consistency, and trade frequency. The script performs individual backtest for each SMA length from 10 to 1000, testing 991 values, and then for each tested SMA, it calculates the total number of trades, profit factor, which is actually total profit divided by total losses, and win rate. And finally, it gives a score which is calculated based on win rate, profit factor, and total trades. And then only moving averages are considered that meet the minimum trade count. And finally, the one with the best score will be shown on the chart. Here in the settings of the indicator, here in the inputs tab, the minimum trades to consider is set at 100 by default, which users can change it based on their preferences. And here for the strategy type, by default it is set on long only, meaning only long positions are considered in the backtesting. You can also choose buy and sell, so both of long and short positions will be considered in the backtesting process. This option also depends on your trading strategy, if you only take long positions or both of long and short positions. Alright, so this moving average line is the best simple moving average with optimal length in terms of profitability, consistency, and trade frequency. And this is the result of backtesting 991 values for the length of the simple moving average from 10 to 1000. Alright, let's see how we can use this moving average in practice. As you know, moving average is the most simple and basic indicator in technical analysis, but one of the most important indicators, and it's actually a base for many of the other indicators that you see on trading platforms. Even fundamental traders or long-term investors also use moving average to have an insight about the overall trend of the market. Moving average is actually the average of closing prices over a specified period of time, which is known as length of moving average. And this average is constantly updated as the price is moving forward and new data is available. The reason we calculate moving average is to smooth price action and filter the fluctuations and noises. By removing the noises, as you can see, is moving very smoothly in compared to the price action, and we can easily identify the trend of the market by the help of this moving average line. For example, here, by the help of this moving average line, we know that the direction is up no matter if we have fluctuation and downside movement of the price. And here the direction is down even if we have noises and upside movement of the price. In a downtrend, the price usually stays below the moving average line, and in an uptrend, the price usually stays above the moving average line unless the pullback is large and crossing the moving average line. So a moving average line helps you to filter the noises and clearly see what the direction of the market is. But please pay attention that moving average lag behind the price because it is derived from the price, and so in practice you may be a little late regarding the changes in trends, and this can affect your analysis unless you are a long-term trader or investor, which in that case it is not an issue and the value of the asset is more important for you. The most effective way of analyzing trends is price action analysis, which you directly work with the price to find patterns that show changes in the market structure. In case if you're interested to learn price action analysis, recently I published a book about this subject, The Art of Price Action Trading. The link is in the description and you can get it later if you're interested. Alright, getting back to our moving average. So as I said, a moving average line line filters the noises to help us with the direction of trends. Many of the times, the moving average line can act as a support or resistance level. When the price is in a downtrend, the moving average line can act as a resistance level. And in this case, you can see that whenever the price is around this moving average line, we have increase of selling pressure and decline of the price. And on the other hand, when the price is in an uptrend, the moving average line can act as a support level, which means when the price is around the moving average line, the buying pressure increases and we have advancing of the price. So a moving average line is a kind of act like a dynamic trend line, and this can help us with finding trading opportunities in the pullbacks within a trend. In an uptrend, when the price is near moving average line, we look for long position opportunities, and in a downtrend, when the price is near the moving average line, we look for short position opportunities. The length of moving average directly affects the position of the moving average line related to the price action. In this case, this indicator calculated the length based on backtesting result and found an optimal length for the moving average line. And this is the result that you see on this chart. But for example, if we add another simple moving average to our chart, and if we go to the settings of the indicator, and for the length we set it for example at 100, and also let's change the color so it will be easier to differentiate between them. Alright, now you can see that this moving average line, which we set the length at 100, is placed farther away from the price action in compared to this moving average line, which at the moment has a length of 30. This moving average line with longer length is smoother and less responsive to the price action, and because of this, it also gives later signals. For example, changing to downtrend for this moving average happened here. You can see that from here, the moving average line is moving downward, but for this moving average line, it happened around here, which is much later as you can see. Or changing to this uptrend started from here for this moving average. You can see that from here, the moving average line is moving upward, but for this indicator, it started around here, which is again much later when you compare it with this moving average line. But you must pay attention that moving averages with longer length have their own use cases. They are suitable for longer term trends of the market. Usually traders add 2 moving averages to their chart, or even 3, one with shorter moving average and the other with longer moving average, and then they use the crossovers of the moving averages as a signal for trend changes. When the shorter moving average crosses below the longer moving average, it is a bearish signal, and when the shorter moving average crosses above the longer moving average, it is a bullish signal. Traders usually use length of 100 for mid-term trend and length of 200 for long-term trend. These are just popular length among traders, and they usually use 20, 30 or 50 for short-term moving averages, which in this indicator, the length is calculated based on backtesting to reach to an optimal value for the length, which at the moment is set at 30 as you can see. Please pay attention that besides the length of moving average, the type of moving average also plays a role on the smoothness or responsiveness of the moving average line. Two of the most popular type of moving averages are simple moving average and exponential moving average, which exponential moving average is more sensitive and responsive to the price action. So by considering same length, exponential moving average stays closer to the price action, and this can provide earlier signals but also more number of false signals in compared to simple moving average. Because of this, EMA is usually used for entry trigger and SMA for longer term trend identification, but we are not limited only to simple moving average and exponential moving average, and there are also other types of moving averages like double exponential moving average, triple exponential moving average, volume weighted moving average, Hall moving average, Arnold-Legox moving average, and so on, and each type can have its own advantages and disadvantages. In a separate video, I will make a comprehensive guide on different types of moving averages, their characteristics, their advantages, and their disadvantages. Make sure you subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video, and good luck with your trading.